Good morning, traders. It is Monday. Happy Monday, the 11th of April, 2022. It's 8 a.m. Chicago time. Thanks for joining me this morning for Trader Bite number 2210. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Diving right in this morning to the conversion trading pre-market summary sheet here. We're seeing a market that is mildly risk off. We're seeing more and more on the news feed regarding the China COVID lockdown. It's a severe lockdown. Families have been, citizens, families, residents have been stuck in their homes, not allowed to go shopping or provide or anything apparently. Who knows? Never know. For over a week now, things are getting pretty bad over there. The other piece is the French elections. Macron and Le Pen both are front runners as expected. This is going to be a very contentious election, and of course, it's likely to shape the political outlook for Europe. So we're keeping an eye there. More escalation expected in Ukraine. The fighting is expected to pick back up and to probably be more furious this time. There are defaults taking place, the rail system in Russia and others, and the overall it looks like it is likely to have continued impact. Continued impact into the economic outlook for the globe in terms of supply. We're seeing pricing pressures as a result, especially for food. Interesting article out of Bloomberg for North Africa, Egypt, 100 million people out there who are seeing a 50% increase in their wheat supply and their food costs, and that's likely to cause some political unrest there. We're likely to see that across many, many different places. Today, let's look at the week since it's Monday. This morning, the top tier figures. This morning, we got the Great Britain GDP month-on-month for February came in at 0.1%. The forecast was 0.5%, worse than expected. For the rest of the week, we're looking for Great Britain unemployment rate for February, expected at 3.8%. Claimant count change for Great Britain at tomorrow at 2 a.m. also. We're expecting the German zoo economic sentiment. That's a high-tier number at 5 a.m. tomorrow, Eastern U.S. time. We're looking for core inflation. This is an important one at 8:30 tomorrow. Expecting 6.7% for core, and the inflation rate for the U.S. year-on-year for March expected to climb to 8.3%. That's coming out tomorrow. Pay attention to that number at 8:30 a.m. Balance trade out of China at 11 p.m. tomorrow. Wednesday, we're looking for inflation rate out of Great Britain, expecting 7%. That comes out at 2 a.m. Eastern. PPI out of the U.S. at 8:30. Again, another one to watch, not as important. Bank of Canada interest rate decision at 10 a.m. on Wednesday, and the monetary policy report at the same time. Thursday, ECB's rate decision at 7:45 a.m. on Thursday. The ECB rate decision expected to remain at 0%. And then retail sales out of the U.S. at 8:30 Thursday. Michigan sentiment prelim. This is likely to be a mover. 58.8 is expected at 10 a.m. for the month of April. That's what's on deck for this week. Friday is off, by the way. Friday, the markets are likely to be are closed for Good Friday. We do see some numbers scheduled to come out, interestingly, but the markets are closed on Friday. So that's what we've got. And then looking just at oil just taking a beating here. Oil has fallen from approximately $98.50 on Friday to a low today of 92.93. Oil currently off 3.84%, trading at $94.50. We're seeing silver pop a little bit. Gold is holding its own pretty well. Gold has been climbing, has climbed throughout this session. Gold has actually seen a push higher with an open of 1949.60 and a high of 1974.60, currently trading at 1967. We're seeing crypto fall off a little bit, and that's where we stand. Turning to the S&P, the S&P has traded 220,000 contracts, which is heavier than what we've seen last week by this time of day. The inventory in the S&P is 97% short. 97% of the volume that it was traded in this session occurred below the settlement price. The range is 45 points, which is higher than the expectation. It's higher than the mode of range over the last 252 days statistically, but it's also higher than the first standard deviation from that mode. So we're likely to see a drop through and a flush through 44.50. That was a week low. There's a double bottom last week, I think Tuesday, Wednesday, or Wednesday, Thursday actually. And we got to 44.46 and a quarter. So going to be gunning for that this morning. It's kind of obvious, so be careful. It might cause a false breakout, but the expectation overall for the ES is a rotation down to the next balance area discussed last week, which was 44.14. 44.14. We talked about a 30-point move from that double bottom. So that's where we stand. Here's what was expected on Friday. The primary scenario is an open, a pullback through the 75 down into approximately the 70, 72 area, and then a climb to above 4,500. The market had a different idea of what to do, and here's what actually took place. In our review segment, the S&P actually pushed lower than that to 44.6875. The idea was correct. The scenario was correct. The magnitude was more than expected. We ended up turning around. We had some really big directional moves on Friday before consolidating into the high. We could not take Thursday's high. We had a completely inside day on Friday that was completely expected, as I talked about, expecting an inside day. But what it did is it opened right there at 44.89 and a quarter. It tested 68, and then it symmetrically tested 45.16, only to finish. We settled at 44.83. We closed at 44.87 or so. We opened at 44.89. So what we had on Friday is rejection of the higher prices, pretty good taper at the top, and a relatively weak rejection of the lower prices, giving us bounce. So we had 3 days of balance, Wednesday, Thursday, Friday, and we are trading below that balance. Currently, we're trading at 44.5150 down here. This is the indicator for the last price right here. So we are opening in a gap down this morning, and so I'm looking to sell. I'm looking to sell since we broke below the couple things to note here. We are still in the 3-day balance. We've given up Friday's range to the downside, so that's somewhat bearish. So I'm favoring the short side, but you have to remember that we are still in balance. We're still in that 3-day balance. Let me see if I can pull it up cleanly here. This is a better chart to look at. So this is the 3-day balance right here. So we've got, remember, with this chart, the blue is the day session, the orange is the overnight session, and we're looking at a 15-minute volume profile chart, and this is a visible only. So you could see that we've spent a lot of time in this area, and all we're doing is we're breaking below this, below Friday's range, but we're still in this 3-day balance in this box right here. So as it pushes up, I am looking to get short against Friday's range, but I would caution that we are in balance. We haven't broken below balance. We do that if we broke the 44. If we break the 44.50, you can see that double bottom right there. If we break below and come back, then I'm looking to lean against the 44.50 and this structure right here, these weak lows. But since we are opening here, it could really squeeze. It could squeeze quickly back. RTH mid. Let me look at this. This is the wrong label, I'm suspecting. Yeah, wrong label. So this is not RTH mid, this is full session mid. Sorry, need to fix it right here. A little bit obsessive about my charts. So it could pop right into that 44.68 area, in my opinion, and bring us back into line a little bit with Friday's range. Still low, but it still sets up a potential additional short to the downside. Techs are weak. Techs continue to be weak. They're leading us down. They've been getting beat up a little bit even on this rally. They're relatively weak, and so to me, there's some really clear structural opportunities today. Really important to kind of maintain your discipline in terms of risk. There's a lot of overhead, not only in the risk overhead from global macro, geopolitical, but there's also a lot of overhead from a structural side to lean against. So looking at the way this thing's set up, I'm leaning to the short side. So let's take a look at what's expected for today. Just setting up the chart here with my stock zones, master levels, everything's turned on. All right, so we are trading right here. The expectation is we open up, we respond to the magnet, we respond to the overnight point of control, push up. I'm looking for a short up here. I'm looking for, what does that look like? What does the setup look like? It looks like we open, we are climbing, and then we can't climb. It's printing on the offer and it just cannot climb. Especially if there's an iceberg on the offer, it's trying to climb and it's not able to do so. In other words, a lot of energy or a lot of effort in terms of volume. Volume is energy. Price is direction. Okay, so price is price, but volume is the quantitative portion of that. Thinking in physics, you can point an arrow, but if it doesn't have enough volume, boop, doesn't go anywhere. But if you pull back and add a lot of tension, that's volume. That's the energy behind price. Think of prices that way. At least I like to, just from an engineering background. And then I'm looking for it to turn over, and I'm going to do the best that I can not to miss this break, expecting it to flush. Be careful, though, the flush may see some buying right away. Again, pop quiz. Why am I expecting that it might bounce right back after it breaks through the 44.50. I gave you the answer about 5 minutes ago. I want to see if you're paying attention. Why am I cautious, even though the double bottom is going to break? Yeah, look at you. Man. Good answer. The answer is because we're still in balance. Still in balance. So be careful of this whiplash back into the range, consolidate, and then from here, the moment of truth, right? From here, does it go up or down? We don't know. If we poke through, if we stick our hands through the ice, smash through the ice, stick our hand underneath there, if there's nothing there, then we're going to pull our hand right out, and then it becomes an opportunity for buyers to step in. If we break through that glass or whatever, and there's a lot of depth there, and there's still pressure downwards, then it'll likely slip very quickly into 44.15. That's the trade that I want, but I'm going to be very, very careful. In other words, I'm going to give this trade very little room to come back and whip through me because we are imbalanced, because we would be imbalanced in the overall picture. This is just a pullback on that big rally. We don't know for sure yet if the rally was a bounce off of the sell-off, and that's what dominates. We have no idea. So we have two conflicting time frames, so we have to exercise additional caution. So I'm thinking it'll likely bounce back up and then trickle down for the afternoon, and then I'm looking for the 44.14 down here in the ES, okay, before the bounce. So that's scenario one. Scenario two, we break the low, get down to the overnight low, get the overnight stat, push the 44.50, spill down into the 34.35, which has been in play for a bit when we were down here. Then we might see an impulse up. If I see an impulse up, I'm looking to lean long. And in this situation, you're looking for the prior settled statistic, the prior settled stat right up in here. And then ultimately, you'd be looking for the point of control stat, the prior point of control stat. And that'll bring us back to 4,500, expecting resistance at the double O here. And then it rests. And what this did is it poked through and came back into balance. Caution shorts going forward. Any good news is likely to blow right through the 45, 16, 17 area and squeeze those shorts out. So very conflicting scenarios because we're at the edge of balance at the bottom. And we want to see today, and I believe it's going to happen today, we want to see what kind of action we get below the 44.40, right? 44.45 or 44.50. So that's what we're looking for today. I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Good luck. Take care.